let's hear from our first keynote speaker to talk about the Economist's Global Outlook 2026, Navigating Changes. Please welcome the Asia Senior Analyst and Lead in ASEAN from the Economist Intelligence Unit, Kun Syetarn Hansakul.
Good morning, ladies and gentlemen. It's really an honor and pleasure to be back here with PropertyGuru Aris again. Thank you for inviting me back, and I see some old friends here, which makes me extra happy. Today, I'm going to be sharing with you the Economist Intelligence view of what lies ahead for us in 2026. And our theme is navigating changes. So please allow me. First, I'll start with the global outlook. We'll talk about the macro themes, the things that will affect us in big trends. So there are three themes or tectonic plate shifts that are happening. One is AI, artificial intelligence. As you know, all the big tech companies are investing very heavily in this area. And it's going to be transformative in how we work and live and how countries interact with each other. There will be winners and losers from this AI race. And this leads me to the second point, geopolitics. So both the US and China are vying to be the number one. They want to come out on top in this AI race, among other things. And this is creating the world where there are a lot of geopolitical shifts, alliance changes, and it's creating uncertainty and a lot of changes that we need to navigate. Thirdly, another shift is policy, and biggest among them is trade policy. As you know, the tariff that was announced on Liberation Day in April last year has changed the way companies, businesses plan how they produce and trade among each other. So globalization is not exactly dead, but countries are finding ways to work in the new environment. The key economies are going to be growing at a weak rate in 2026. The US, China, EU, and Japan, they're all not going to be growing faster in 2026. 2025 turns out to be quite resilient, more so than we thought. And that because of the front-loading activities when companies and businesses try to take advantage of the early part of the year to trade and to avoid the tariffs, but that unfortunately will not last. And the uncertainty has also led companies to rearrange their supply chain shifts, and this actually doesn't put efficiency or productivity at front, but it put resilience at the top. And unfortunately, this creates cost for everyone. And this uncertainty and geopolitical concerns are actually increasing cost for business around the world. So what the governments of each country are trying to do is to support the demand, to help the businesses cope. And this means a lot of fiscal stimulus, but this is creating anxiety in the bond markets around the world. So that's one of the changes that we have seen happening and will continue in 2026. The next slide is basically a world map of how fast countries will grow. So the red orange ones means that growth will be faster. And that you can find in Middle East and Africa and in parts of Asia like India. And the green is the mediocre growth, and blue and purple are the slower growth. So you can see that The regions that are less affected by the tariffs are those in the Middle East and Africa. And Asia has been able to avoid the worst brunt, but it's not really coming out on top in this regard. But Europe is not doing too well for 2026. In Latin America, Mexico has been harder hit because of a few issues with the U.S. So this is the backdrop for 2026 that you should be aware of. But in a way, growth across the globe are more even than in the past, that we have some very high growth and low growth. But here, it's more evenly spread. In the U.S., we expect growth in 2025 to be quite a bit slower than last year. Last year, U.S. growth was 2.8%. This year, we expect it to be 1.9%, and the same rate in 2026. And the interesting thing is the U.S. growth has been really driven by AI investment. If you see the charts on, I'm sorry, the chart is not up. There we go. On the bar charts on the right, you can see that the AI, which is the blue part, is the one that contributes the most to growth. And other fixed investment, unfortunately, is actually a drag on growth. And this is actually worrying because we don't know how long this AI boom is going to last. An AI boom is really propelling the sales of chips across the world. You can see the charts again. May I have the chart, please? The semiconductor sales are really increasing at the rate that we haven't seen in recent times. And if you look at the AI data center investment, AI-related investment in the US, it's really equivalent to a few of the big moments in history, like the railway investment, as well as the technology investment of the 2000s, the IT internet boom. And we all know that those things have some life and some legs to go, but it doesn't last indefinitely. And now AI boom is accounting for about 1% of US, the investment is accounting for about 1% of US GDP in nominal terms. Talking about tariffs, the tariffs in the US, reciprocal tariffs that President Trump imposed on all countries in the world, is actually uncertain. The future is uncertain because the case is now in front of the court and it's being appealed that Trump didn't use his power. So there is not a small probability that these reciprocal tariffs can be rescinded. But this will give Trump more incentive to double down on what we call sectoral tariffs. And this is something that could be a big drag on world growth in 2026. And we've already seen that with some of the sectors like automotive sector and pharmaceuticals, which is now on pause, steels and aluminum. But forthcoming could be sectoral tariffs on semiconductors and electronics, and that will be quite damaging for Asia. The US tariffs has actually shifted a little bit of the way the US trade with other countries. So we have trade with China coming down. Imports from China is coming down quite a fair bit. But interestingly, trade with countries, other Asian countries like Vietnam and Indonesia are still doing quite well. But overall, I would say that the imports from the US from traditional places like Japan and the EU actually show weaknesses. So this is something that shows the tariffs have been hurting demand in the US. and it's going to weigh on exporters' income in other countries. Now I'm going to talk a little bit about geopolitical trends. So we have three areas that we are quite worried about. The Russia-Ukraine war has been going on for many years, and we actually see only a 51% chance that we will get some sort of a deal between Russia and Ukraine. And as you know, this has been dragging on. And even if we get a deal, it's likely to be a weak deal. What could happen also if we don't get a deal? We can have a frozen conflict, which is pretty much of what we have seen in the past years. Or the worst is the renewed fighting, which is, but we assign a low probability to that. So likely to see a weak deal being hammered out in the coming weeks or months. Middle East, also we have some improvement in terms of the security risk, but it cannot be taken for granted that the new ones will not recur. But we take delight in seeing that many of the countries are taking efforts to reach out to other regions like Saudi Arabia and the Gulf countries, reaching out to Asia for more trade ties and connections. The Palestinian-Israeli conflict has been on the right path, but we also cannot take it for granted. And we are only in the early stage of the process towards the Palestinian statehood. Finally, the China-Taiwan conflict or tension will not go away easily. Instead, the incursions of Chinese planes in Taiwan's airspace actually has been increasing in recent months. So this is actually worrying. And it's something that can create the risk-off mentality among investors. So it's something to be aware of. I'm talking now about Asia outlook. The good news is Asia will be fairly resilient. This year, we expect GDP growth of the Asia Pacific to be about 4.1%. And next year, or in 2026, we expect it to slow slightly to about 3.7%. And the growth star will be India, which we expect to grow above 6%. And the second and third will be Vietnam and the Philippines. What we see is that the governments of these countries will need to continue with the fiscal stimulus and easing monetary policy, cutting interest rates to keep demand going as the sectoral tariffs from the US hurt the exports and manufacturing in those countries. Looking at the sectors in Asia, which ones are more vulnerable? It's electronics. And this will hurt countries like Vietnam, Malaysia, and Thailand a little bit more than the others. For Japan and Korea, they're more susceptible to tariffs on automotive, even though that has been kind of reduced somewhat, but it's still much higher than what used to be. And the outlook for export in Asia. This year, you might see that export in Asia, you read the news, it's growing about double digit. But this is not going to sustain. We see it moderating to about single digit. And in 2026, we think export growth will be actually negative. And this is because the demand that has been supporting the export sector is stable, but the activities were front-loaded at the beginning of 2025. So in 2026, the demand will not suddenly surge. One bright spot could still be AI and advanced chip exports. That will probably perform better than others, but it's unlikely to repeat the performance we've seen in 2025. But good news is inflation is well behaved in Asia, and this will give room for central bank to ease. So in an environment where lower interest rates are expected, I think that will support investor sentiment for all sectors, including the property sector. So I think that's good news. In China, the growth story is changing, and we think that the government's goal of 5% growth each year is not necessarily easily met. This year, in 2025, we've seen growth of 5.3% in China, and that was supported by a heavy fiscal stimulus. But the stimulus is also restrained in a sense that they will not go on indefinitely and it's targeted. So we are of the view that growth will end up in 2025 around 5%, 5.1%. And next year, it will slow moderate to about 4.6%. And China is also beset by structural problems of aging population and the overhang of the property sector correction, and the more difficult external environment because of the US trade protectionism. And we think that the truce that we have seen between the US and China this year so far, it's been stop and going on. So the threat is not removed. It's just delayed. And this has led China to respond by finding new homes for the exports. So if you look at the export destination in all over the world for China, you can see that even though exports to the US decline, but they are exporting more and more to regions like Asia and the other global south regions, as well as Europe. And this is creating a problem for these countries because a flood of cheap Chinese goods is competing with the local industries in those countries. I'm sure many of you know, if you go to Home Pro or other places to buy your furniture or anything, the Chinese goods are always much cheaper than others. So I think this is creating a problem for the countries that face the flood of cheap Chinese goods. And it could create pressure for the government to act by doing something about it, either by increasing the tariffs on Chinese goods or asking the Chinese companies that operate in their countries to have joint venture partners. So that's like something that we expect to happen. The China property sector, how do we feel about it? My colleagues in the China team feel that it probably will not hit bottom yet, but it's possible to see the property market bottoming out in 2027. So this year, the property market in China could still be a drag on the overall GDP growth. But the good news is it's not going to be in a long, deep freeze like in Japan, which was going through 2 decades of property slump. We don't think that will happen in China. So just a little bit more, and then the light at the end of the tunnel could be coming. Despite all these difficulties that I have highlighted to you, there are some positive things that can await us in 2026 and in the medium term. One is that a lot of you may worried about what will happen to the US dollars and the US financial system, because as you know, many countries are trying to diversify away from US dollars and US assets, given the uncertainty of President Trump's policy and the way he conducts with politics. We don't think that there will be a collapse of the US-centric system, but there will be a slow, gradual pivot towards finding alternative. So you can see that gold prices are very high. Cryptocurrencies are coming back on and off. But the some diversification has been made to the euro, yen, pound, but there's so much that the others can absorb. So we are of a view that this adjustment process will be orderly rather than a sudden run away from the US dollar or the US system. And to put it simply, if you look at it from the economics point of view, if you look at the current account deficit, you can see that the US deficit is really huge. And a lot of countries that are exporting to the US have been gaining from this US consumption. So countries like China and Japan and many countries in Asia and some in Europe running a current account surplus. And the US has been supporting this by US demand. But the US is retreating. So which other countries can step in? If you look at the other countries that run the current account deficit, there's the UK, there's India, there's Brazil, but they're tiny. So in the foreseeable future, there's really no one to compensate for the lack of US demand. It just have to be gradual and a slow process. So what can Asian countries do about it? Asian countries are actually finding new partners. We've seen a rush to have an FTA with other countries, including the EU. EU just signed a FTA with Indonesia and is negotiating one with Thailand and the Philippines. And ASEAN countries will try to deepen their connectivity as well through the umbrella of like RCEP. And they're going to have push for a digital agreement among ASEAN countries. And India will also reach out to other countries, both bilaterally and multilaterally. That's happening. And China is also looking for friends. You can see that China has been giving African countries now zero tariffs unilaterally. And China BRI, Belt and Road Initiative investment, was the highest in 2025. So I think this is a sign that the world is trying to get on, even as the US is retreating. But it will not completely compensate. But they are still going to grow, maybe not as strongly as before. That's the key message that we think the world minus one will look like. Another good news is that the emerging Asia middle class is still growing. We forecast that the percentage of middle class spender, which is defined as households with income of about $15,000 per year, will continue to grow. It's highest in Malaysia right now, and followed by Thailand and then China. But in other countries like Vietnam and India, we are seeing this proportion growing quite rapidly. So that's going to be supportive for Asia growth outlook into the end of this decade. Finally, to end on the good note, Asia is actually, or ASEAN, is actually getting greener, and we have solid evidence for it. This chart actually is the level of emission per unit of GDP. So you can see that in the past decade, Asia has been able to grow with less reliance on fossil fuel. So through the renewable energy adoption and other policies that support the green practice, it's showing result, and the trajectory is showing that it's going to continue with or without the US lead on this. So this is good news for Asia and good for climate change, good for climate risk. So on that positive note, I thank you for your attention, and I wish you a good deliberations and meetings for the rest of the day. Thank you very much.